Hey everyone, Kevin here. So a lot of folks are wondering, why the heck did the market somewhat drop this morning? There were a lot of stocks that were up a lot higher than they are now, and all of a sudden we saw this inflection point in the market, and it came out all of a sudden right at the same time as we got a news headline that read, US job openings hit a record 9.2 million. Now, ordinarily you might be thinking, oh, okay, we got a lot of job openings. That's really good for businesses. If businesses are hiring, that means businesses must have enough profits and enough profit margin to spend money on more employees, so that way they can fulfill more demand and make more money and hopefully improve their business efficiency by hiring more people. This seems like it would be a very positive thing, right? So why would the market in many sectors pull back? And this isn't to say that some sectors aren't up today. The Dow is still green today. We still got some tech stocks that are up today, but they were up a lot higher earlier. Like, what happened? Why would we see this pullback on this jobs data? Well, here's why. Right now, at the amount of reopenings or open positions we have for jobs, it would take us over a year of job gains to get back to pre-pandemic levels of employment. That means even if we have good jobs growth for the next year, once you include the people who are going to quit or going to leave the workforce every month naturally anyway, it's going to take us over a year to get back to pre-pandemic normal in terms of filling these jobs. That's creating a little bit of heart palpitations or even heartburn in the stock market, because folks are wondering, wait a minute, we're kind of pricing these stocks right now in such a way that we're expecting big growth, but wait a minute, if you can't find people to fill these jobs, whether that's because they're receiving a $300 unemployment boost, which ends in September, or it's because schools aren't open yet and they don't have the childcare, or they can't afford the childcare, or because their skills have changed, whatever the reason, the slower people go back to work, the more spread out these earnings at companies are going to be. And so this means that all of a sudden, if let's say at the Cheesecake Factory, you were expecting a 10% earnings growth, but because they have employee limitations, they don't have enough employees to service enough people, and you end up having tables that go unweighted on because they don't have enough employees, then maybe instead of seeing a 10% growth, you only end up seeing a 4 or 5% growth. Now all of a sudden you're still growing, but you're not growing at the rate that Wall Street expected, so all of a sudden you see when expectations get missed, stocks pare back. And stocks have kind of started to pare back a little bit in anticipation that estimates could get missed. Now, don't get me wrong. We're pretty much expecting tech and recovery and casinos and restaurants and all these companies to smash, to do really, really, really well with their earnings. But when we hear that businesses are hiring, we know demand is there for the businesses. But when those jobs get filled, that demand doesn't get serviced, which means that demand never or potentially doesn't fully become realized revenue. And the stock market wants realized revenue. So the longer it takes to get people back at jobs, the softer the stock market is going to be likely to run, or the slower the stock market is going to be likely to run. This is one of the reasons that I've been very, very nervous and increasingly nervous over the last few weeks about holding call options. I've been selling puts and I've been selling calls, but I'm nervous about holding calls right now because I think the theta decay is going to eat us alive. I think we've gone from a phase of, oh my gosh, we have vaccines. Oh my gosh, the world's not ending from COVID, March 2020. And then, oh, it's okay. Once we get the vaccine, everything's going to reopen again. Everything's going to be great. And we've gone from this phase of the stock market being fueled by nothing but hopium to the stock market now having to prove itself, businesses having to prove themselves to the stock market. And that proof is coming slower than expected, especially with the lack of people being able to go back to jobs or going back to jobs for whatever reason. It's a problem. And that's bad for call options. Call options do really, really well when you get compressed, quick earnings growth, or not even earnings growth, just hopium or momentum or whatever. You want that fast, because otherwise you get eaten alive by theta decay. So, very, very important things to keep in mind. If our economy is going to recover slower, and earnings growth is going to be great, and companies are going to do great, but they're going to do great slower and in a more moderated pace, then you want to keep in mind that it's going to take longer for stocks to regain to previous highs or to new highs. Consider this. I flew on JetBlue for the first time in over a year and a half. In fact, it was the first time I was on a commercial flight in a year and a half since we flew to Disney World right before the pandemic, which is crazy because we were on a Disney cruise And on the Disney cruise, in the lounges, they'd had TVs that are like, COVID spreading through Wuhan. It was crazy. So we were on a cruise during that time. It was kind of freaky. We're looking at each other like, what if somebody has COVID? Oh my gosh. Like, and it's not something to laugh about either. It's just, I'm more laughing at a nervousness of that feeling of like, oh gosh, that was weird. But anyway, consider this. I flew on JetBlue. My flight out was delayed 2 hours. Things were broken, things didn't function, the lavatories were broken on the plane, or at least one of the lavatories was broken on the plane. They had to use an auxiliary power cart to start up the plane, which ordinarily the plane would be able to start itself, but some starter or whatever was broken, and they're like, oh, don't worry, we'll be fine. And it's like, oh, okay, all right, whatever. I don't even want to think about it. And then on my flight back, there's so few people working at the airport, which the person at one of the workers at Los Angeles International was talking to me, going, we can't get enough people back fast enough, so we just can't keep up with demand. So we're not able to efficiently use all of the gates that we usually have. I come back and I land, and my plane sits at the gate, in front of the gate for 42 minutes, waiting for the plane ahead of us to leave because that flight was getting boarded too slowly because they didn't have enough staff. So it's like, that doesn't make me feel great about flying. That doesn't make me feel great about going out and spending money again, which is something we've talked about on this channel, is that here's what happens. When when there's a travel boom and all of a sudden everybody goes back to traveling, you have so many people at Disney World or at the airports or at the restaurants that it actually potentially becomes unsatisfying to travel because there's so many people at the same time. So rather than just prices going up, which would be inflationary, right? Maybe prices don't go up as much, and when prices don't go up as much as maybe they should, what happens? People end up paying not with their money, but with their time, and then they spread out when they fly, when they travel, and boom, there you go. You spread out earnings potential, you spread out that earnings growth at companies, you slow down the stock market, and you end up getting screwed if you're sitting on too many call options. It's just something to keep in mind. I'm very, very transparent with my thoughts on this channel, and I think that's hopefully why you subscribe and support the channel. If you like these thoughts and you want more of them and you want my buy sell alerts, check out the amazing programs linked down below, Stocks and Psychology of Money. You'll get all my trade alerts. I've been trading and selling a lot of puts and calls, so if you want all those alerts, at least to see what I'm doing, entertainment purposes only, of course, check out the link down below and have 40% off. And folks, we'll see you in the next video. Thanks.